Keith here for Am I Rich? And my personal view on buying stocks is that you're basically purchasing part of a company that has an idea that is potentially going to improve the wealth of the world, making things a little more efficient for people or providing some kind of new thing that they really enjoy. And if you can get invested at the right time, you can get a portion of that wealth back. So when I've been talking to people about investing, I've come across a few people who have asked the question, how do I even get into stocks? Like, how do I start to invest in these kind of different securities, etc. So I thought I'd do a quick little video on the basic steps to get investing right away. So, or at least in the next few weeks once your money is transferred and you get all settled. So the first step is finding a brokerage. You need to find some kind of brokerage that will allow you to connect with the stock markets or commodity markets or whatever you're trying to trade. But we'll keep it mostly about stocks. So if you're trying to trade something on the New York Stock Exchange or the Toronto Stock Exchange or the, Nikkei, something like that, you need to find a brokerage that will interface with that stock exchange. Now, generally, the classic way to do this was you would go to a bank or a financial institution, and this is still a possibility. You can go to many local banks have a trading wing to them, so you could just go down there, talk to them face to face, and they will set you up with an interview with somebody, get you talking, and they will lead you through all the steps on how you can invest through their company, get you signed up, get your money in, and start trading. So those can be very handy, especially if you're not really sure what's going on, you don't really know what to invest in. They'll probably also suggest products that you could buy, like a mutual fund or some kind of retirement fund that you could invest in that they offer. These could be a good thing or not, but they're just an option, and they're usually quite good for people who aren't really sure about their investing strategy. So that's one option. The downside of these, they typically have a little bit higher fees than other options. So what are the other options? The other very popular option as of probably the late 1990s is online trading platforms such as, for example, Questrade, E-Trade, TD Ameritrade, to just name a few. These brokerages, you go online, say you're trying to invest even in, Japan, and you go online to Interactive Brokers or SBI Securities. You can go on their websites and you can sign up. They'll basically do the same things as if you were to go to a bank, but you just have to read through all the paperwork instead. And then once you get money transferred in, you're set up to start trading. And the advantage of these often is they will charge slightly lower trading fees. So every time you buy a stock or a set of stocks, you'll pay a certain fee that is often lower than traditional banks, but not always. The one caveat about these online platforms is often they have a lot of strange fee setups that aren't always clear. So, well, they're clear, but you have to read through several, like dozens of different possible ways you could pay fees. And so if you do end up trading certain commodities or certain stocks or try and transfer money out of your account, you might end up paying fees that would basically be the same as a big bank. So that's just something to keep in mind, but sometimes they can be quite a bit cheaper, and so that's something nice to be aware of. Just an example again, like maybe something like Questrade, you might end up paying, if you're a value investor, you might not trade stocks very often. And if you don't trade for an entire quarter, they might just ding you like $25 just for having your money sit in there, even though you didn't really do anything with them. So just one thing to be aware of. Now, something else though that is becoming a lot more popular is the idea of a zero fee for trade platform. And these are often on cell phones that you can download apps. And it depends on the country you're in. So for example, the United States has Robinhood and M1 Finance, I believe. And maybe a few others, but those are two big ones. And then For example, in Canada, I think Wealthsimple is coming out with a platform. They will charge no fees. And so this is a big advantage over the old online platforms and banks. The downfall might be you can't always have it with a registered taxing account. So in Canada, for example, if you wanted to have a tax-free savings account that you would trade your money in, you can't use that with this Wealthsimple app, at least not yet. They do hope to have that in the future, and in that case, I think it would be a very popular option in Canada, as I don't believe we have access to something like Robinhood or M1 Finance in the United States. And other countries may have variations of this, I'm not really sure, but generally I'm from Canada, so that's kind of the option that is available soon here, or right now it's in the trial version. You can sign up and you might be on it. One caveat is some people have talked about that you might have the ability to trade stocks as freely as you would like to. So you would maybe purchase stock, but then there might be kind of a buffer between you purchasing the stock and the stock actually being purchased. So there might be a bit of a lag, and that could be an issue for some people, just for the Wealthsimple app. I don't know if that's actually true, but there has been some talk, like say on Reddit, about it. So something to keep in mind. Now, once you find the brokerage, the great thing to do next would be to sign up. So if you went to a bank, they'll sign you up, they'll give you the paperwork and tell you what to do. If it's online, you read through, you sign up, and same with the apps. And they'll usually ask you for a few different documents. The very most common ones are your social security or social insurance number, some kind of a taxation ID, and then some personal information, name, date of birth, things like that. And then maybe they'll ask you for an additional a bank account that they can tie your information to. And some people also ask about your employer. These are very common requests, and you may have to do a little bit more depending on where you are and the platform that you're signing up to. And then once that's done, it could take a while too. I mean, you might not be clear. They might need you to mail copies or actual physical documents to them before they can agree to it. So some are very quick, some aren't. So just something to be aware of. And then once that's done, you can transfer money. And then the transfer money part, some do electronically transferred funds, so it can be within a few minutes, can be there. And some you have to send a check or certified check, which could cost you extra fees just to do it. There may be fees between the bank you have and their platform. There might be some kind of hidden fees just to move. Like they might ask you to make a bank account in their institution before you can put money into their platform, and so there might be extra fees there. So it's just something to be aware of. But once you get that settled out, which could take, all of this could take somewhere from a day or so, or to a couple weeks. So usually, if you have in mind a couple weeks, you're probably safe. And then once you're done that, you're ready to start investing. And once you're ready to start investing, you can research stocks or ETFs. I mean, if you don't know much about stocks and you think the market is fairly valid, you're not about to crash, I would recommend, maybe starting off with a ETF, something that matches like the S&P 500, or some very high dividend stocks that you think are safe, just to get yourself into the whole idea of investing. And after that, you can kind of start in learning strategies and how to invest better. But once you start trading, the biggest thing to understand is the fees. So if you're having an app where it's 0 fees for every time you purchase, you can gain 0.5% and sell your stock, and you've gained that 0.5%. But if you're trading on a platform where they charge you $10+, maybe $15 for a trade or something crazy like that, then you sometimes have to make, depending on the amount of money you put in, sometimes you have to make, 10% plus just to get your money back and not lose money. So if you're worried about that, it's usually good to have a lot of money if you're doing higher fee transfers, or not very many transfers at all, or try and find a lower fee brokerage. So those are kind of my thoughts on the whole thing and how I would go about investing. I would love to know if you guys have any new information on how to invest in your country, or how to invest at a lower trading fee or lower fees in general. Yeah, and if you thought this was useful, feel free to give it a thumbs up or subscribe. Other than that, thanks for watching, and we'll see you in the next video.